Hello, Face. Good turnaround Tuesday to everybody. Hope everyone's doing okay. A couple of looks. We have a 3-drive pattern here in Euro. Hesitate to take it. Thought we might get up to 61.8, 114.62, but acting a bit poorly, something I talked about yesterday. The dollar as well. 3-drive here. It's very classic. Why can't we get a rally back towards 96 or so? The reason I'm not pulling the trigger today is I hate to have a small window, 24 hours, although it's plenty for a lot of people, for at least a scalp, with the Fed tomorrow morning. And then you're confronted with the NFP on Friday. So try and be out of anything that you do. If you short the euro here or buy the dollar here, try and be out before the Fed announcement tomorrow. Kind of agree with Blake that there's a possibility that during Q&A, perhaps there's a dovish tone from Powell, and then we should be able to achieve 61.8 back here in the euro. Euro weaker than pound. Pound looks like there still is potential to try these highs again. This has been pretty much sideways, just working over the overbought condition, and that's a pretty good reading at 78. So I think there's a chance that the pound makes another move to the upside while this is going on. And after yesterday's drubbing, S&Ps are coming back here. We start penetrating 2650, and I still think there's a chance, especially if the Fed accommodates and the NFP goes well, that we get one more push up in the S&Ps or a potential short. And then just a quick update. I bought a derivative of Bitcoin yesterday and declared it a bottom prematurely, but it's still playing around with the 78.6 level here. As you can see, we have, 1, 2, 3 here. Crypto has such a life of its own. I don't worry about the Fed. I don't worry about NFP. And actually, it's my first foray into, trying to bottom pick Bitcoin, doing it with it's a trust. So I don't have a crypto account. So the way I'm doing it is with this GBTC, which is a trust. And as you can see, even if we get new lows in this, we aren't going to confirm. So I think there's a possibility for a recovery in this and crypto and Bitcoin, that this could rally back towards that level. Gold, I'm not quite ready yet to start thinking about the short side. I think we're getting closer now, 1320. We're approaching this upper trend line and 78.6 that Steve and Greg had talked about. We are diverging on the daily still, even though this is a third day up. 4 hour, no divergence. 1 hour, no divergence. Oh, actually, we're starting to get some in the 1 hour. So looking at 1320, if you're long, between here and there, you probably want to be taking profits. Gold shares haven't quite made a new high with gold. They're actually lagging gold, but they should be able to do it today. Here's a nugget. See, we're still under the old highs. And then the blue chips, if you don't like ETFs, 3-time ETFs, GDX is on the verge of doing it. Okay. I don't know what this candle is, but we're finally, after all this progress in gold, maybe we head up towards 2210. So if you're fortunate enough to still own the gold shares, that too I'd be considering taking some profits on. And what do I want to wrap it with before I hand it over to Blake? The yields. Let's look at yields here. So, Greg, I really respect his work, and, he's saying we're on our way up. Okay, yields are on their way up. I think they are too. I'm talking about, I thought we hit 280, 290, but Greg is looking for new highs in yields on his macro stuff. So as long as this is happening, people say, well, the top in the S&Ps was a double top, but not much of a flight to quality here. Rates backed up a little bit. Still looks like we could have some upside here, maybe 282, 290. So if you don't have a level in the S&Ps, I was thinking I would look for potential shorts in the S&Ps when yields got back up towards 290. And we're still 15 basis points away from that. And as long as this looks like this, and there could be some higher levels, even though the yen failed from 110, I have a hard time wanting to short it when it looks like yields still have some more upside. So I look at the yen, and the 111 still looks possible. We hit a little 3 drive here. So I'm still looking for these highs to be challenged and taken out. And I'm basing that upon my view that yields are still heading higher, which kind of mean risk on despite what happened yesterday. There's some, don't they know that when yeah, that it is, yeah. Well, I'm wrong under the lows in Bitcoin. I think the big round number was 3,000 Zig. I have an announcement that if you want to come to New York, there's our own Joe Perry, Bloomberg contributor, Real Vision contributor, and both Joe and Steve are going to be there for sure, and possibly Blake. And they're planning, besides their presentation, to have a meetup, a get-together, appetizers, have a drink and get to press the flesh with Steve, which is, a pretty good opportunity for traders here in the States since he's overseas in Greece, and Joe, and it's going to be a great expo. And this is the title of the formal presentation, and then the day of the presentation, they're planning on having a get-together with appetizers, kind of a happy hour, European style. Here in the U.S., we start at 5. I think Steve's talking something like 8 p.m. So it should be a great presentation and a great opportunity, not only to hear our people, but everyone else presenting. And we're going to have a landing page where you could sign up for the meetup and get together the same day of the presentation on March 11th. And with that being said, I'm interested in what Blake is thinking going into the Fed tomorrow. And how are you today, Blake?
I'm doing all right. It's quiet. It's a quiet session.
Yeah.
I mean, yeah. Euro's got.
Well, could it be because of the, people don't want to do a lot of size in front of Powell tomorrow?
Yeah, I mean that's probably it. We've got the debate starting here for the Brexit Cooper.
Oh God, that's going on too.
That's happening too. So I think the market's kind of just waiting to see what's happening there. I'm sitting here looking at the euro. I was looking at the same thing as you, thinking we might hit that 618. The dollar index, as you pointed out, the dollar index has pulled back. Now this is to a 618 retracement. Let me go ahead and delete that and do this.
Yeah, I was kind of thinking there was a chance for a higher low in the dollar that we wouldn't take out that 95, and this looks like we could be putting in a higher low here, but you could throw your charts away during the press conference tomorrow.
Yeah. Well, I think and that's for tomorrow for sure. I mean, you gotta you kind of gotta. I think what's important is noting that the dollar index has pulled back to the 618 retracement as well. It's got a little 3 drive there too. Yeah, you were pointing out the 3 drive in the
Yeah.
in the US dollar. So you got the 1, or excuse me, the 1, the
Right.
2, the 3, right?
Yeah.
Divergent relative strength. But
Right.
the question is, has that already played out already? I mean, you know what I mean? It's like I don't know if I'd be too excited about looking to go long the dollar at this moment, unless you pinpointed a euro short at 114.50 this morning.
Yeah.
It's like, do you really want to chase it down here? It's dropped to its lows of the session, but are we just going to end up being in a 30 pip trading range day? I'll tell you one thing that's got my attention at the moment is going to be the euro yen. The euro yen's trading above 125, and I'm I was a little skeptical about it yesterday because we dropped back below 125. We're trading at 124.70, 80. Stocks had pulled back, and you guys saw the S&P yesterday. We were pulling back, and the euro yen didn't really drop. And so now that the S&Ps have bounced, and you can see we're held this 26.25 support. We're the S&P is grinding higher. Question is, does the euro actually run and make new highs now? And you can see I have a little alarm set up right at the 125.25 level, because if we hit new highs, that's gonna trigger a response for me, because I look at the dollar yen. The dollar yen is basically in an upsloping channel, right? Upsloping channel. Just I thought maybe it was an ascending wedge, but it's really been holding up pretty well. So if the dollar yen makes its way back up to 110, that euro yen could be trading at 125.50. So because the euro is not going anywhere, and so if the dollar yen pushes back up, like I said, back up towards 110, that euro yen is going to firm up a little bit. And it's not just the euro. It's not just the euro yen. You got the euro yen, you got the dollar yen, you got now the Aussie ahead of CPI data is just kind of holding below the 79 yen, but you've got the Canadian yen in this little up channel too. All of the yen pairs look like they could firm and trade up towards their highs. Frankly, if equities continue to hold on, we are. And as you pointed out, it's Tuesday. Stocks started the week weak, and today could be a turn higher in equities as well. So, I'm not going to rule out at this point in time. I'm not going to rule out the yen pair is not going higher today. I think they're worth watching around here, around these levels. The cable, a lot of people are pretty bearish the pound up here. Almost every bank research that I've read this morning and yesterday, and actually I can take that back, even over the weekend, doesn't think that the pound's going any higher from here. Everybody thinks that the pound is, its upside is now limited from here. Everybody thinks that it's, gotten ahead of itself. And maybe it has, but I'll tell you this much: as long as we trade above that 130.50, I wouldn't be on the short side. So if we dip here in the pound, hold on one second. If we dip here in the pound, I'd be willing to be on the long side if we get down to this trend line. And that's not saying that it's going to, but like I said yesterday, I'm not, just because I'm a little hesitant of it going higher at the moment doesn't mean that I want to short it. I'd rather be a buyer on dips, at least while we're above this trend line. Now the question is, do we dip? And do we dip, and how far do we dip if we do? The euro's trading at lows here. Let's see what the euro can do. This is a 4-hour chart. We have a little dark cloud cover here, but we still have 45 minutes for this this candle to form. We could very easily rally right back above 114.30. I wouldn't get too excited about it now, but yeah, I'm really, I think today is you gotta kind of wait around to react. If you are bullish the dollar, I think one of the trades that you can keep a real close eye on is the Aussie. You know, if the Aussie should get a rally back to, like, let's say 72 cents, you know, we're at 71.59. If we can get a rally in the Aussie to 72 cents, there could be an opportunity to be on the sell side of the Aussie dollar, because at that point in time we might have an opportunity to sell it ahead of the inflation data that's coming out tonight. You got CPI data coming out of Australia at 5:30 my time, so it'd be 7:30 Eastern. So that might be an opportunity for you guys if we can get a rally in the Aussie. That would be something that I'd be thinking about right now. Let's see, the Kiwi's, you know, Kiwi's actually been pretty firm, and remember, we came out of a triangle pattern. So as long as we're hanging outside of this triangle pattern, you know, you got to be a little, you know, careful on the short side of the Kiwi. Trade balance numbers came in a little bit better than expected last night out of New Zealand, and that's kept the Kiwi relatively elevated from a, you know, fundamental perspective. A couple of guys in our chat room were talking about shorting the New Zealand Canadian, and I was like, yeah, I could see, you know, wanting to sell it while it's up here, but you know, again, with the New Zealand dollar outside of that triangle, I'm a little nervous about trying to short anything Kiwi related at this moment. You know, that means you really have to see some dollar strength come through to take this pressure off, like the New Zealand Canadian, for example. The dollar Canadian, you know, this is a flag pattern, and the flag pattern broke on Friday. We've retested the underside of the flag, okay, and now I don't know what to do with the Canadian. I'll tell you this much, though: if you get it back above 133, you know, somewhere around here, it's going to start squeezing. So you got to be a little careful with the Canadian if you're trading it currently. U.S. dollar, Mexican peso, she's not doing anything right now. The Swissy, you know, little bounce back. We got minor down channel. You can see it right here. Looks like that. So minor down channel in the Swiss, but nothing, you know, nothing too exciting to do here. You know, I hate buying Swiss francs. So in other words, I hate shorting the dollar Swiss, just because the cost to carry is so high. You know, I'd rather be a buyer, but I'm not. There's nothing right here that's telling me I should be buying it, just because we came off the 618 retracement and we're currently in a pullback. So I think if we were to test like 98.50 somewhere down here, I'd be more apt to be on the long side of the dollar Swiss, but not at current levels. The US dollar Norwegian krona, we still have this big head and shoulder pattern. Remember, there's actually two head and shoulder patterns here. So if you guys don't know, the original one that I played was this one, okay, and then that target's down here at 840, just below 840. But there's a longer term head and shoulder pattern. So if this one really breaks down through 844, then, you know, the targets are going to be down here at like 810. So the US dollar Norwegian krona looks, in the event that the dollar does weaken, the U.S. dollar Norwegian krona looks like such a wonderful setup on the short side. The U.S. dollar Swedish krona, we're range bound in a triangle, nothing to really do there. And like I pointed out with the dollar yen, we're just kind of bouncing around this this up channel, and I wouldn't want to be short right now. Not with the S&P as firm as it is. I think while we're trading above, you can probably just, you know, look at this resistance, which is acting as support right here at 19, let's just call it 1910. As long as we're trading above that, I don't know about being on the short side of the dollar yen right now. You know, we get below 1910, and then, you know, it might look a little bit better as a short, but you have to have equities following suit. One of the other things that I'm also thinking about regarding the dollar yen, and then I'm going to talk to Steve about and you guys about New York here in just a second, is gold. So gold has rallied to new trend highs. We are at and above. We're above the 618 retracement. We're closing in on the 161% extension of the range that we are in. So you can see the 161% extension. Very overbought here. Okay. Now, here's the risk. If you look at the daily chart here too, you can see this divergent relative strength. So we're hitting new trend highs. Relative strength is not hitting new highs. So the risk with that is, let's say the dollar yen stops here at the 161% extension. All right. Let's just say, for argument's sake, it stops here and we head back down. Okay. If that happens, then the risk is for the yen pairs to go up, because the yen tends to have a strong correlation with gold. So if gold goes up, the yen strengthens. So what that means is, as gold breaks out higher, typically what happens is the dollar yen will go lower. Well, you can see how the dollar yen hasn't really been going lower, right? We came off the 110 level, but it really hasn't gone lower. So, and let me see if I can do this here. Let me compare this to XAU USD, and you might be able to see it better like this. Okay, you can see the correlation, right? So as gold goes up, dollar yen tends to go down. So if gold stops, and let me grab my pen here. If gold does this, because you remember we talked about the 161% extension, the 161% extension that was up here. So if gold turns, then the dollar yen may turn and rally back to 110. That's what I think the risk is right now, and that's why I look at the yen and I'm like, I don't know if I'd really want to short the dollar yen, or Aussie yen, or anything else, Euro yen, whatever. So that to me is something that personally I'm paying attention to. Right? Whoops. Let me get rid of this. That's something right now that I'm paying pretty close attention to regarding the yen. All right. So anyway, just a few things that I'm looking at, and I'm not going to talk about the crosses, because I want I'm gonna pass it over to Steve, so Steve actually has something to talk about. It's a really it's a quiet market, and I don't want to steal all the thunder. So let's talk a little bit about the New York Traders Expo. Steve, are you here?
I'm here, and Joe is also with us, Blake.
Oh. I don't think anybody's ever heard Joe's voice. Oh no,
I
guess on Real Vision TV and Bloomberg, but not here. Joe, are you here? I
think here as well. We had him at least once.
Oh, Joe,
hey,
are
Joe.
you here?
Joe, we can't hear you. He hasn't muted himself, but check the selected microphone, mate.
Well, anyway, while we're waiting for Joe.
Yeah. Let's talk about it.
So there's the New York Traders Expo. Is what day is March
8th. It's March 10th, 11th, and 12th. But the 11th, Monday the 11th, is dedicated to FX. So at the 11th, we have the FX events, Monday the 11th of March.
So it's March 11th, 10th, 11th, and 12th. And
yes.
And Steve is going to be traveling in from Athens, Greece, to be in New York. Joe's going to be there, and I'm going to try to make it. I haven't promised anybody that I'm going to be able to make it. It depends on logistics, how things work for me at the end of February. But I can make plans to go out there within 2 weeks. But we are going to have at least Joe and also Steve. Let's see, New York Trader.
Hello?
Hey, there he is.
Now we can hear you, mate.
Sorry about that.
No problem.
I'm not used to this this webinar thing. But I got the microphone working.
Everybody here, I'd like to introduce you to Joe Bloomberg, Real Vision.
Joey, we call him Joey Bloomberg around in the Forex Analytics community. So
must have had a bar mitzvah then.
Yeah. Oh, I'm definitely going with Joe Nigerian there. I'm definitely. There's Joe Perry right here. So,
okay.
So we, it's, obviously chock full of good speakers. A lot of, Denise Scholl, we've had her on here before. There's a lot of people, Boris Schlotzberg, a lot of people that Dale has interviewed that are going to be at the New York Traders Expo. So if you're anywhere in the area, close to New York, or you can make it out there, make sure that you come out and visit with Joe and Steve at our booth. We will have a presence there. Steve is bringing all sorts of goodies. And so he's bringing some for everybody. So make sure if you're in the New York area to make sure you come see Steve and Joe, and then I might make an appearance as well. And I'll let you guys know about 2 weeks in advance. But if I go, I'll be there on Monday. These guys will be there, the whole time. So anyway, I just want to talk a little bit about that before I pass it over to Steve. So Joe, what are you planning on talking about at the expo? Because you're doing a breakout session, right?
Yes, so we're going to have a speaking slot on March the 11th from, actually, if you go down, I think it's 3:30 to 4:15, right? So it actually starts on Sunday, and then the exhibit booth is open Sunday evening. So if you're around on Sunday, you can stop by and see us ahead of the week. And then we'll be there all day Monday and all day Tuesday. And then we have a speaking slot, as we were saying, from 3:30 to 4:15 on March the 11th. We're going to be speaking about navigating the Forex market using technical confluences as a guide. Both Steve and I will be in there. And then we're talking about putting together perhaps a little get-together afterwards, after the session ends for the day. And then we'll be there all day Tuesday.
Now I know the reason why I'm coming.
Exactly.
By the way, there's one more thing.
Trust me, Blake, you're coming. You're coming. Otherwise, I'm going to eat your heart.
One more thing, though, is that this is free to attend. So all you have to do is register, and they just want like your name and your email, I believe. Oh, and I guess a couple other things.
Yeah, there you go.
But it's free.
But it's free to attend, and so anybody could go, even if you're just in the area, you want to stop by and just say hello. You just come in and say hi, and then you can leave. But as these guys were saying, there's a lot of good other speakers there. We are in the Forex vertical. They're having a whole day dedicated just to Forex. There are other verticals as well for other things. So if you're interested in options, they usually have something on that or whatever else. But there's going to be usually like 50 speakers there, just talking about all sorts of things. But we're going to be obviously in the Forex one.
So it's going to be a pretty huge event. So
yeah.
All right, on Joe. Well, thanks for talking about that, and we look forward to. I know people see you on Bloomberg and they see you on Real Vision TV, so I'm sure a lot of people want to come to see you and meet you in person as well. So that's awesome.
Yeah, I'm looking forward to it. Should be fun.
Yeah.
So yeah, come by, say hi.
All right. So anyway, I'm gonna get going, but you guys have a great remainder of the trading session. Steve, I left a lot of good stuff for you, Coach.
Thank you, Blake.
And we'll catch you guys soon.
All right, buddy.
See you later, Blake. Bye-bye.
See you, Blake.
Yeah.
Thanks, Blake.
Hey, Joe, Steve, yeah, you guys after the expo should fly to the other coast.
Maybe, you know what? If they have something out there,
It'll be warmer. It'll be warmer here, I promise.
Coach, you should come out. You should come out there in March.
You should actually come join us, Dale. Yes, that's very true.
Yeah? Huh.
Yeah, absolutely.
All right.
Absolutely.
It's great.
I have to. I might be moving that week. So anyway, I'll talk to you about it a little later.
All right.
Okay.
I'm looking. Yeah, I think it's going to be a great show. I looked at those speakers. A lot of them I know. from interviewing them, and it's really they really put together a great collection. Only, I think the best is going to be you and Steve, the dynamic duo there. I don't think people should miss you.
Oh, trust me, Blake is going to be there. I know that he doesn't want to promise if he's not 100% sure, but he's gonna be there. He's going to be there, and as we said, we're going to get we're going to have a landing page in place within a couple of days on our site, so you can declare your interest if you want to be in the ForexAnalytix get together afterwards. You don't need to be a ForexAnalytix member to do that. So we're going to gather up at some bar for some finger food and some drinks afterwards, like 8 in the afternoon or something like that. So we can spend some time together, and get to know people. It's going to be fun. It's going to be nice getting to meet you in person. Stelio, what do we have for today?
How's it going in Parliament?
Well, we have the UK is taking center stage today before the Fed tomorrow. So we have a vote coming through. Actually, first there are a few amendments put through by various members of parliament. And actually, the interesting thing is that it's becoming clear that one of the, well, if not the main stumbling block, but one of the stumbling blocks is the Irish border. And it's something that, if you go back a few months, it's not a few months, but, when the whole Brexit vote was done, it didn't figure as one of the big points, but now it's become huge. And I wanted to say, just take a minute, just for the people who are not aware of, the whole thing of how it is. The main issue is that because the UK is going to leave the EU, there's going to be a problem, because in Ireland there's a Northern Ireland and Ireland are joined by land, and if the UK is to leave the EU, there should be theoretically a border there, because you can't have the UK not having free trade with the EU and then having a border which is open, on that side. So, but if you go back a few decades, there had been the Irish and Northern Irish had quite a bit of trouble, and there was the Good Friday Agreement in the 90s kind of solved that and made sure that there is a free passage and make sure that the area, everything was calm and all that. So what's going to happen? What's happening now is they're trying to figure out how to leave the EU but maintain the openness between Ireland and Northern Ireland, and that's the difficult thing. And now they're talking about leaving it open for some period of time and then coming up with some other solution. And it's getting quite complex, because one part wants it to be closed, the other part wants it to be open, and it's you can't have both at the same time. So that's the issue in a nutshell. And there is an amendment today put forward by Brady, which requires a backstop to be replaced with some kind of other arrangement at some point in the future. It sounds very vague to me. So, all these things, they're talking about them and voting on things which are really vague. So I have no idea what's going to happen today. Theresa May, just an hour ago, I think, she stated that she's going to open negotiations or open talks again with the Europeans about the backstop. And there was a headline literally minutes ago from the European side saying that they're going to issue an answer to that. So, they have been very firm on this issue. The Europeans, they just don't budge. But let's see what happens. So theoretically, we have votes later today. I think it's 9 p.m. UK time. And now they're already talking about another vote in February, because today is not apparently the big one. The big vote is going to be, again, more changes. And I don't know. I've lost the plot, really. I'm tempted to stop following it, but really I have to. But yeah, so that's what's happening with the UK today. It's a bit of a mess. It's a bit of a mess still. And that should take us towards the FOMC tomorrow, where we get some more clarity from the Fed. Another mess. Well, yeah. Well, I think the Fed is a much smaller mess than the UK. It's What's your gut on Powell? Will he speak like a dove, or will some hawkish or interpreted? People misinterpret what he says all the time. Now that the S&Ps have recovered as much as they have, still, do you think he'll be as dovish? Good question, man. The central bankers are not the same. The way they talk is not the same like it was 10, 20 years ago. I think, he did do an about turn a few weeks ago. He turned dovish. I think he's going to be probably neutral and wait and see, because there's no reason. Like you said, the stocks seem to have stabilized. There's no, the China negotiations are ongoing. There's no need for him to stir things up, I don't think so. I think he's going to be quite neutral.
It's not easy to make educated guesses, because so far what we've seen during, let's say, the last 3 months is schizophrenic. It's bipolar, right? I mean, you're getting from messages that are, a lot more hawkish than the market expects, to within a few days, messages that are a lot more dovish than the market expects. In essence, losing a lot of credibility, because initially Powell was showing that he was willing to speak directly, speak his mind, tell what he has in mind, right or wrong, but follow a path that he had determined was the proper one. And suddenly, within a few days, following also Trump's explicit and open and public pressures, he does a 180 turn and then starts giving the exact opposite message. Of course, I'm not saying that we didn't have also deteriorating messages from the economy, but it's not that those weren't there before, right? So
I think the key question, Steve, is going to be whether or not he confirms the Wall Street Journal article last week that said the Fed is mulling over stopping the runoff on their balance sheet. That's what got the dollar tanked Friday.
If that's the case, that's going to definitely complete the bipolar picture, because if you remember, Coach, it's not even a month since the markets were quite saked by the fact that he explicitly said that the balance sheet reduction is on an autopilot, right? That no matter what kind of tweaking they do to the monetary policy having to do with hiking, not hiking, pausing hiking, accelerating hiking, data dependent, at least the balance sheet reduction is on an automated path. And, if we now hear the exact opposite of that, that will literally complete the 180 turn. So obviously the markets will cheer for that in the short term. But if you remember, Bernanke had said to the Congress when they were trying to explain QE and what QE is going to be, he wanted to make it clear that QE is not going to be debt monetization, because it's going to be short term, right? Yeah. So if after inflating the balance sheet of the Fed to 4.3 trillion, they managed to reduce it just by 300 billion, so from 4.3 to 4, and they actually signal that that's it. That's how much they managed to unwind it. I think that then the market will openly question any kind of idea that, which of course, to be honest, you have to be stupid to really believe it, but any kind of idea that they might have had that indeed, there was a plan from the Fed to have some temporary measures in place and then return monetary policy to normalization. So the market will then realize that the path of inflating the balance sheet is going to be an ongoing path, and the balance sheet is just going to grow larger and larger by every recession that we stumble upon, right? And I don't know how the bond markets are going to handle that message in the medium to longer term, right? Because then you start questioning the value of those bonds, because when you get a combination of a government that keeps sending you the messages that how many times has the U.S. government said that if we fail to increase the ceiling, the debt ceiling, we're going to default? So when you have a government that at the same time tells you that if we don't manage to borrow more money, we're going to default, and a Fed that tells you that we are actually going to keep inflating our balance sheet, what does that tell you for the bonds? So, this is something that, should cause a lot of thinking in the markets. Anyhow, back to the charts, and I'm not going to go over what Blake did. I agree with him on his view on the cable. The cable has broken above this, so I would be looking, perhaps for more upside from here. USD yen. Personally, I do think that we might have a little bit of more downside, but I want to stay a little bit with Aussie USD. Blake already said that we're going to have some news tonight. So the question is, what happens from here? And the answer is, I think that this move lower is corrective in nature. So if we get good news for the Aussie, I think that an outright break above this is definitely going to target immediately the 73 cent area. This is a confluence of the 200 daily moving average and the horizontal support resistance area. Now, on the chance that we have some Aussie negative news, I think that 70-30 is probably going to be a good area, to buy the Aussie for and expecting a recovery later on. So I do think that the Aussie should push higher at least once again. Today is going to determine if it's going to be if the corrective move is already over, which is, in my opinion, quite likely, or if we're going to see a little bit more weakness before that happens. At the same time, today's news are probably going to determine the fate of the Aussie Kiwi as well, because the Aussie Kiwi seems to be mature enough now to this corrective move higher, because it really looks corrective. Seems to be mature enough to produce some more weakness. We're already probing the area below this channel. Obviously, if we get an outright strength tonight from Aussie, it means that we're going to hold within this channel for longer. But if we do get Aussie weakness, probably that's going to signal that this consolidation is done, and we're looking for lower levels from here. So Aussie Kiwi on the precipice of breaking down, Aussie USD on the precipice of breaking higher, and tonight is going to clear those two up. Now, having to do with the Kiwi, as Blake showed before, it's quite constructive from here. I'm still expecting a push towards the confluence of the 61.8% fib of the last move lower and the horizontal support resistance area here. I think sooner or later we should see that manifesting as well. Let's revisit the USD CAD as well. Blake already showed the USD NOK. USD CAD yesterday had a recovery, but as you see today so far, an inside day, I do think that the technical damage for the next leg lower had already been done by that huge down day on Friday. I still have a pattern in play short here, and I still think that it looks like a good opportunity. At the same time, instead of seeing a real recovery, we still see crude consolidating, coiling in essence, in what seems to be a triangle. If we go down to a 4-hour chart and we check crude here, there it is, you'll see that this looks like a clear-cut triangle. If we break lower, we're going to have something different, but still I would be looking for support anywhere from 49.50 and above. But if we break above this triangle at right, we're not going to have more doubts. I do think that we should push at least towards the 57 area, which is the 127% extension of this last leg lower, if not higher from there. I wouldn't be surprised if we saw a move towards 60. Now, by the way, we are seeing some upside in cable. Let me see. Yeah, cable seems quite constructive from here. Of course, everything is going to be judged on what happens today in the UK. Now, Euro seems to have stalled here. Euro remains a mess. I redrew this channel a little bit to capture as much of the price action as possible. So I made the channel like this, but regardless, it remains a mess. I would really not be doing anything with it here. But if you want to have a look at Euro pound remains under pressure. As you see, there were several zones here. We got rejected from the first one we found. Want to see if this channel has any significance. It might not. It might not have any significance at all. So, it's a short-term 4-hour channel, but I want to see what happens from here. But Euro Pound definitely remains under pressure, and I do think that if we break below 86, there's going to be a continuation to the downside. So Euro Pound definitely remains under pressure, and if we do see another move higher in the pound, I think that that's going to help euro remain subdued, because Euro Pound is a very liquid currency pair, and some strength that's going to come through cable that's going to be unrelated to the USD is probably going to put a euro under some pressure as well. So I'm monitoring that closely. Now, having to do with the metals, overnight, let's go back to the 4-hour chart. Overnight, we had another push higher in metals, which is not really surprising because we were talking about that yesterday, and we said that the next upside target in gold is the 161.8% extension, which we almost tagged today. That's at 1311. And above that, we have the 78.6% fib at 1321. So 1311, the 161.8% extension, already created some short-term reaction. Is that going to be enough? Likely it won't. We might see another push to the upside. And silver did manage to do some catching up. It actually incrementally posted a higher high. But I do believe that that's what we drew yesterday, a triangle here, a possible push higher that actually manifested. I would want to see at least a 61.8 at 16, if not a little bit higher, 16.15, horizontal support resistance area. You can see if I zoom out, you can see it here. I think that we can easily make it up to that zone, 16.15, 16.20, before seeing some deeper pullback. Obviously, short-term overbought on both of them. So, if you buy them here, you can make some money to the upside, but where would you put your stop loss? So I don't think that the risk-reward ratio is really appealing. I would rather trade it short. I would rather trade them short once I see like a bigger type of reversal, and take it from there. Now, and nothing has changed with the rest of the metals. Very briefly, going over them, platinum remains one of the weakest, holding support for now. But I think that once metals turn down, it's going to be the first one that's going to break the downside. Palladium consolidating its recent gains, and copper still remaining below this horizontal resistance area and the broken triangle resistance area. So, that might be a flag. I would still be very, very cautious being long here. Now, let's have a look at the bonds, because we didn't do that actually yesterday. So it's a good opportunity to have a fast look at them. And the first one is obviously the Bund. The Bund more or less reacted as expected. Don't forget, I was mentioning that a long time ago. This was a very, very long-term consolidation, corrective pattern lower. You can see here clear corrective characteristics, overlapping, choppy, and slow price action. And we finally broke above that at the end of last year. So we really need to respect the potential for more upside from here. Obviously, despite the recent rebound, the treasuries are a lot less constructive, because the treasuries, in essence, remain in a downtrend since a long time ago. And despite this recent rally, and despite the fact that, yes, you can also view this move lower in the treasuries as corrective, so in the short term we might have more upside, it remains clear that the bonds should continue to overperform for a period of time. They look bullish, and they might be starting another move to the upside, while the move higher so far in the treasuries looks corrective, which means that simply from a rate differential, expecting more weakness in the Euro USD is probably a smart way to look at things, because if the bonds will continue doing better than the treasuries, that means that the bond yields are going to be lower than the treasury yields. By the way, speaking of which, if you want to purely have a look at the treasuries at the yields of the 10-year treasuries, it's not by accident that we had quite a strong move lower. And as you see, on the rebound higher in the yields, we seem to have found resistance at previous area of support. This was the neckline of an inverted head and shoulders formation. We broke above it. We stayed above it for a period of time. Then we broke back below it, and now we seem to have found resistance at this exact same trend line. So below 280 in the 10-year yields, I would be quite careful, because it wouldn't surprise me to see a rejection from here and more weakness in yields, another push lower, perhaps towards at least the 61.8 of the last move higher, which should bring the yields just below 2.5%, right? So I would be quite cautious looking at the yields as well. And that's an extra reason why I am quite cautious approaching the USD yen from here. Here it is. And, my main view remains that we might, as you see, we've already stalled in this horizontal resistance area, also 50% fib of the last move lower in the USD yen. So I wouldn't be really surprised if we got rejected from here, or even if we push higher from here, there is an alternative. We might push a little bit higher from here and see a rejection a little bit later from over there. Even if that proves to be corrective, I think that it can easily produce another move towards at least 108 and this congestion area, ignoring the flash crash at the lows in essence, if we ignore the little flash crash that we had there. So in the short term, I would definitely not be buying the USD yen. I would rather be looking to sell it higher. Actually, I'm not really looking to get involved, because like the Euro USD yen has been quite obnoxious, and it's not the best place to put your money. But if I had to do something with it, as I said, I would be looking for shorting opportunities rather soon than the opposite, than buying opportunities. Now, if we have any questions, by the way, usually lately we have a lot of questions. Today I know that the market has been calm, so probably not many new questions have come up since yesterday. But if you have any, just don't hesitate to put them on. Bitcoin, Ethereum keep depreciating. They're near the low, so nothing has changed there. And not much to mention. I mean, they need to do a lot more to prove that they've been switching to constructive. That my fundamental approach to cryptocurrencies anyhow is extremely skeptical, to say that at least. So that's that. Now, having to do with indices, I have to say the following. I reduced my position further yesterday, almost at break even, with I like minus 0.15%, simply because the more the price action is unfolding here in a triangle, the more likely I see to have another push higher in stocks before lower. So I have to say that I'm very, very skeptical for a move to the downside yet, because this seems like a short-term consolidation to me, and usually those get resolved to the upside, right? So I want to have more dry powder to short it a little bit higher, towards 2,700, or even a little bit higher, 2,730. But if we do see that one more move higher as well, I will be expecting that the move lower might be has a high chance of being corrective in nature. So then we might see a retracement back to this area before higher levels in the short to medium term. Okay, so I wouldn't be surprised if that's what we get from the market, especially, as I said, looking at the 4-hour chart and this market, it looks quite resilient, and despite having some guidance that it's clearly lower from many companies. The expectations for earnings per share have been depreciating, but the price doesn't seem to be catching up with that. Obviously some manipulation is taking place as well. I mean, we've gotten used to that. So that's that. Now, having to do with the DAX, as long as we remain above 11,000 and this inverted head and shoulders formation, obviously you have to maintain somewhat of a constructive bias, because the target of the inverted head and shoulders formation is up here at 11,670, and even if we are to see more weakness from there, we have a little bit of space because if you remember, 11,800 was the breakdown area of the larger head and shoulders formation. So, even if you believe that there is more weakness ahead, that doesn't mean that there isn't room for more upside here before seeing that in the DAX. Same deal with the FTSE. FTSE consolidating below this broken triangle. So, hasn't actually triggered an inverted head and shoulders formation as the DAX did. So obviously between the two of them, it looks like, the DAX is the preferred choice if you want to be long, one of those two indices, and the FTSE is the preferred short if you want to be short. Until that happens, FTSE, as you see, remains in the middle of a consolidation. I would, abstain from doing something with it. Hi, could you please share your view on AussieCAD? Absolutely. We can have a look both at AussieCAD and KiwiCAD since you mentioned it, and especially since we have Aussie news today. So, Aussie. Aussie. There we go. So if we zoom out, first of all, you're going to see that we broke down from this triangle, right? Let me draw over this chart. So we broke down from this triangle, but you can view this as a larger consolidation if you take into account this trend line, right? So if you're looking at this larger consolidation after that move higher, I would say that this move looks corrective in nature. So in the longer term, we are treading water in essence. We're not doing anything. We're in a large range, moving within it. But if you want to have a shorter term look of what's happening here, I would say that the move higher was impulsive, was clearly in 5 waves, and the move lower looks rather corrective. So as with the Aussie USD, I would have to say that the Aussie CAD in the short term looks likely to produce a move to the upside, to perhaps come up and retest this confluence of resistances near 98 cents. So if you put a gun to my head and I had to do something with the Aussie CAD, I would probably be buying it here. Okay, now having a look at the NZD CAD. NZD CAD, large triangle, break to the downside, back within the triangle. Then we had a move lower, now a consolidation. It looks likely to me that we might get rejected from here. So as you see, the Aussie CAD and the Kiwi CAD are sending kind of conflicting messages. Of course, can it play out like that? Of course it can. But, if the Kiwi CAD, which shows to be at resistance and have the potential for some downside movement here, and the Aussie CAD that looks a lot more constructive, are both of them to play out this way. Obviously, what's going to be needed is some good recovery in the Aussie Kiwi for that to happen, right? But anyhow, between Aussie CAD and Kiwi CAD, I think that Aussie CAD looks to be much better as a buying opportunity. Kiwi CAD, on the other hand, is at resistance. So, in the short term, risk reward favors being short here with a stop above the highs if you're really looking to do something with it, because personally I would just let it be. You know what I mean? I wouldn't be looking to gain any exposure in that. I would rather, trade something that has a much clear-cut, technical outlook than this one. Yeah, my pleasure. So let's see what we haven't covered so far. Coach, you have a guest today, right? Coach. Let's see. Webinars, scheduled interviews.
Yeah, credit's with us.
Okay. Yep, January 29th. So he's going to talk about cryptocurrencies, right?
Yes.
Okay.
Which I'm becoming very interested in. Steve, any asset class, and I know how you feel about crypto, but almost any asset class, whatever it is, after a bubble and prices depreciate 80-90%, which almost happened here in housing. I know housing's different because you need to live somewhere, But
housing is different because there is no question that first of all, it's undebatable the fact that real estate has intrinsic value. I mean, even if for some reason prices went to zero, you can still get some rent and live in a place, right? I mean, have a roof over your head.
You can't live in the euro either.
Yeah, exactly.
All right, so but sometimes there's these things called echo bubbles, which are an echo of a previous bubble, and that's what I thought real estate was here in 2009. The echo bubble turned out to be even bigger than what I thought. So anyway, looking forward to speaking to Cred here at Crypto Cred. And
give me a second for my friend Kostas. He wants a view at Apple. Yeah, and I have to tell you, Costa, that I mentioned that several days ago that Apple
earnings
has had
coming out.
Yes, some nice RSI divergence here. So we've already seen a reaction from the 61.8, but I would be careful here because, first of all, we have first area of resistance coming up here, and so far the recovery does not look impulsive to me. But of course, even if it's corrective, it can definitely retrace more. But I have to tell you that the next upside target I would be looking for this correction would be the 165 level. You can see it has been support resistance in the past. I'm guessing that it might also be some fib level if we fib this. Let's see.
I mean, compared to the S&Ps, this has been anemic, but it looks like it could, maybe trade 170 again.
Yeah, you should see. You should see, Coach. You should see actually Nvidia, right?
Oh yeah.
Here it is. You see the 23.6% fib more or less there as well. So I would be watching at those levels. So far, I don't like this rebound. And in general, I have to tell you, and I can devote more time tomorrow. In general, I don't like at all the way, and if you remember, Coach, I mentioned that. The damage that has been done in many stocks in the Nasdaq, in many of the leading stocks, I said that even if we see a new high in stock markets, I believe that there is a very high chance that for this business cycle, some of those stocks have already topped. I don't think it's going to be at all easy for those stocks to reclaim the highs. And if the market is to move to new highs, it will have to do so with other kind of leadership.
New leadership.
Yes, exactly.
New leadership, or if the dollar tanks, commodity stocks could lead in multinationals. So great observation.
Okay,
thank you, buddy.
Enjoy the interview and see you tomorrow. Bye-bye.
Okay, Steve Volge, at Steve Volge, gives one of the best reviews of the board that I've seen. And now I get to talk to my trading warrior brother, Cred. Welcome back, Cred at Crypto Cred. Welcome back to Face. How are you today, buddy?
I'm very well, thank you. How are you doing? Thanks for having me back.
Oh, it's great to have you back. In fact, I took my first foray into crypto, although it's not crypto. I bought a trust called GBTC because I don't even know who to really trust to open a crypto account with, and not sure if you could leave money there. I just feel, maybe you could help me with that. But we're looking at Bitcoin here, and I want to ask you, is it a possibility? I know this is the long term. You're looking at the weekly here, and it hasn't done anything right on a weekly basis. But since that low that we had, there is potential for a higher low here. We retraced 78.6 at the initial bounce, and if it can gather some momentum and even just squeeze shorts, it's very possible that we could have at least a very nice correction back to the breakdown at $6,000 or something like that. So am I delusional in moving into it here at these price levels?
No, I don't think so necessarily, not from a long-term point of view anyway. My personal map is slightly stricter in terms of getting in for significant upside potential. So even if we go to the monthly,
you need it to prove itself to the upside.
I really do. I need much more evidence than this. And I'm a sucker for recency when it comes to just price action, price levels. And so when 6K broke very decisively as it did, my position was that I'm not particularly interested in looking at structure back on this side of the chart, from the run up in end of 2017. And to me, that was just a decision saying, these price levels are really quite old. They're not particularly clear to me. So I'm going to wait for price to prove itself, with recent market structure, as opposed to, guess at that breakdown whether this to get my pen out, whether this consolidation is going to hold, whether it's going to be this breakdown level, this level, or whatever it may be, right?
What would tell you that potentially there's at least a bear market rally coming in Bitcoin?
Sure. I've been thinking about this a fair bit, actually. So in terms of a bear market rally, looking at the monthly, once 6K broke, right? If we just visualize this in very rough terms, so let's just draw out. Let's say this is the 6,000 level, the shelf, however you want to draw it. Once that level was broken and we were in the process of forming this monthly candle, we can even drop a time frame, but I am interested in this monthly. Once that was broken, I looked at the monthly and I said, okay, well, if I am going to refer to structure on this chart, what's the only possible thing that I can look at, right, if I'm being reasonable? And to me, that was this candle here, just that one candle in essence, because that's the only real area of resistance that we had on the run up, right? So price goes up,
turned into a blow
down month, exactly, and then forms a base here, if you will, until it goes off for its blow off top, right? So I'm anticipating, should we return to this level? If buyers are going to bother stepping in anywhere near 5,000 as this lines up, it should be at this level, or at least if you want to box it out, something like this, right, at that origin of this breakout. Now, instead, what happened was price fell through it completely, right? So on the way down, we're anticipating support. Since it's fallen through completely, that's now become resistance, right? It failed to do its job as support, so it's become resistance. So in terms of bear market rally, to answer your question concretely, I'd need to see this level get reclaimed, and that comes out at about 4,200 to about 4,700, quite a big zone, but it is a monthly chart. You can see on the weekly, the structure is quite clear. It's pretty much this breakout high, right? Price comes in, resistance, and then goes crazy. I think if that structure gets reclaimed, it's pretty clear skies to the bearish retest level of 6,000. If you want to be aggressive with it, I think the most recent weekly resistance that's been slapping down the price, which comes out at about 4,000, 4,100. If you can get price accepted above there, it might just chew through this level, and because of the amount of people wanting to trade 6, it might just gravitate towards that price structure naturally.
Does most of the price action and volume happen during Asian trading hours because they're bigger adopters of Bitcoin?
Not from my observations. Especially recently, it's been quite bizarre. It's been on weekends. So technically, when there's no session going on, a lot of the volatile moves have taken place. So the week ends up being quite slow. Everyone lets their guard down for the weekend, and then the rug is pulled, so to speak. But I personally haven't noticed any such relationship that you point out. I'm sure there are people who follow that kind of data much more closely. And I'll be sure to tag you in a tweet if any of them follow up with something interesting. But no, I haven't noticed that specific relationship.
Okay, I also, the reason I asked that, if you could pull up a shorter term chart, like maybe a 4-hour.
Sure, of course.
You see all these big wicks
that
we've had, many over the last several days and weeks. When are those taking place? And to me, as a technician, it almost smacks of accumulation, that people are buying that break. It won't stay down there. It's like pushing a beach ball underwater and snaps right back. And, so I'm wondering, what time of day those spikes come in, and maybe it's all different hours. But to you, does that look like, obviously there's buyers coming in down there, right?
Yeah, I mean the wicks
or shorts covering or what? Or illiquidity, maybe just illiquidity.
I think a lot of traders employing far too much leverage, and who essentially get liquidated or stopped out on these very short, thin moves. I think illiquidities to a certain point as well. You know, you can at certain points push around the market without a huge amount of money. To the question of accumulation, from a higher time frame point of view, potentially. I mean, personally, for me, as a shorter term, at least level to level trader, spikes in price aren't enough. I need to see follow through from price in order for me to perceive that as accumulation, right? So if it is a stop run, for example, to get the weak hands or whatever out of the market before trading higher, I'm trading below the low itself isn't going to be enough. I'm going to anticipate then, some sort of breakout or higher high, and then that's good evidence to me that the market's, being accumulated or that was a stop run. Because, if you look at the price chart generally, it's been quite wicky and, all over the place looking at it, and yet it keeps trading lower in the bigger picture. So I suppose a lot of people have been waiting for accumulation from crazy price levels, and I, on higher time frames at least, haven't seen great evidence for it yet.
And what exchanges, and I want to ask you, when you trade crypto, do you put in a physical stop order, or is it a mental stop and you just get out? And what usually happens to stops? Are they butchered?
Right. So I reside in the United Kingdom, so I'm allowed to, unlike my friends in the United States, to use BitMEX, which is a leveraged trading exchange. For the most part, I will use hard stops, so market stops, for my full position size. And even that's not always going to be amazing because of the slippage that can occur. And then not just slippage, even if you might be right on the direction, as you pointed out, a lot of these wicks make it very hard to define your risk, right? Especially if you're trading these lower time frames, as Steve said earlier, for a lot of these charts, where are you going to put your stop, right? And that's a question I always ask myself before taking any trade. Please go ahead.
Well, you're out there in the crypto community quite a bit. Do you feel from people that you interact with on social media and elsewhere that people feel despair after what happened in the last 12 months?
I'd say a lot of the despair is hidden in the form of those people who are feeling despair have simply disappeared from the community and want nothing to do with it. And the people who are still left tend to be the more resilient lots, or the ones who just, decided to dig in their heels and that they're going to be on this ride. Right, lifers, the ones who made good friends and good connections, in this market, and so sticking around for the community, in it for the tech, as the joke goes as well. Those who came for the bubble and stayed for the technology, involuntarily perhaps, but that's the result. So I think
they were.
Please.
Yeah, you know how day traders, when the position isn't working, can turn into a scalper, and then into a swing trader, and then into a position trader, and finally, at the end of the long and winding road, become investors.
Yeah, it's the classic. Or, if you want to sell or buy an area and it goes completely offside, you just tell your friends that you're working an area as opposed to a specific price level, and so you just keep moving your stop because the area becomes surprisingly wide the more offside you get.
So why don't we talk about the majors? In FX, we have the majors, or mainly the dollar pairs. So to me, as a novice, the other two majors are Litecoin and Ethereum. I know you're a technician, but are there better fundamental stories in any of the other two compared to Bitcoin, that when markets turn, you have a favored or preferred long among the three of them? I believe Ethereum and Litecoin have depreciated closer to 90%, while Bitcoin's been about 83 or so. Just guessing.
No, I think that's right. I think in terms of the majors, a lot of people would mention Ripple as well, XRP. I think I saw I think it was in Steve's watch list, a very polarizing asset in the community. But no, in terms of the majors, I think in terms of preferred longs.
Why are people going to Ripple? Can you tell the story behind it, Cred?
Gosh, fundamentally, I think a lot of people are attracted to the fact that it's a bit of a corporate machine. You know, it's a real company with that corporate flair and big money, and so it's stuck around for a while, so they don't feel it's going. And excellent marketing and just general PR. And so in terms of longevity, they see that it's got excellent marketing, very dedicated community, and a lot of money, and a track record of sticking around since however long it's been around. I think that has attracted a lot of people who think that, you know, it's not going to go anywhere before the next run, not unreasonably so.
Do you have a chart on it?
Sure, I can dig one up.
Curious. I know that it had a pretty good run, I don't know, about 3-4 months ago. Oh, yeah, I think that was it, right? So we've almost retraced that recent big run we had in the summer.
Oh, absolutely,
one-day pop. What was that one-day pop about?
Are you referring to this run here?
No, I think it's back in September. The big, you know, big move. People
I
saying,
see.
"Oh yeah, Ripple tripled in a day or so." What was that about?
If that's swell conference related. I don't follow Ripple's fundamentals particularly closely.
Okay.
I think did we see relief in the market all around towards the end of? I'll need to check very quickly.
Okay.
Well, actually, no, we didn't. So
it almost looks like a pump and dump type of thing that they do in pink sheet stocks, where they just pay people to bring in buying.
Right.
That's what they do in penny stocks.
I seem to recall that I bet. I seem to recall that this happened while Bitcoin was falling off aggressively. So you've got a bit of, I mean, if I'm being cynical, marketing there, sort of juxtaposing how Bitcoin is dumping and looks very weak, whereas Ripple looks very strong in contrast to the number one. But that's just me being cynical. As you pointed out, though, it has pretty much fully retraced to the origin of this original, so this being the, you know, support resistance level or, you know, consolidation or whatever that led to that run, and it's pretty much come into that level. It could be a decent setup, especially if it takes out this low. You know, you get a stop run or spike of this deep swing point into a level of support. Could see a relief rally, but I think it shouldn't, or at least where I'd be taking profit, pretty much this broken floor. Similar on Bitcoin, right? A lot of these majors entered a range. In the past couple of days, the range low has broken down. And so from a technical point of view, until proven otherwise, rallies back into that level are for selling, right? Bitcoin was the same. It went very quiet for quite a bit. The range low that I had drawn out was the low of this big impulse leg, and then the high of the next day as the other boundary. You can see it consolidated, then got stuck below the, you know, this level of support turned resistance, and now has fallen through, right? So from a technical point of view, although Bitcoin doesn't really like behaving in this way, rallies into there are for selling until proven otherwise, right? I think if it re-enters the range, there's a good chance it'll reach for the range high, but we'll just get more of this as opposed to anything interesting. It is at support now, though, right? If we're drawing out structures or levels or whatever else, my eye is drawn to this structure here, because just quite simply, you can see you had a drop, a bit of a base, and then the drop that followed took out this swing point, right? So if
has the futures contract caught on at all? It's been out there for a year, actually. The launch of the futures contract marked the high in Bitcoin. Do you follow it, and do you get any market messages from what happens with the futures?
I personally don't, only some volatility-based things around settlement dates, but it's not a data set that I follow particularly closely. A lot of people pay a lot of homage to the gaps that are left in that market, and how this isn't technically spot, but anyway, how the spot market will then go and fill the futures gaps.
Right.
That's kind of how they're used, but it's not something I pay an awful amount of attention to. If I think futures are settling and my position might be on the wrong side of the volatility, I'll just sit out, but I don't use it to really inform my trades at the moment.
Okay.
Yeah.
Before I ask you what else you trade, Cred, are you still a believer in this asset class? I mean, it's your handle, your community, and a lot of people that you're with. Do you still believe in the fundamental story that these cryptos are going to survive, and that this was just another bubble and there's another cycle coming, and thinking about what the catalyst might be for more adoption of crypto?
I think my fundamental view is quite conservative, that I think the asset class will survive in one form or another, but it's very possible that it will survive with the overwhelming majority of the altcoins, so to speak, having virtually no value whatsoever, right? With just a few of the larger ones or more established ones sticking around. So yeah, I view it from quite a broad brush perspective, that I don't think digital assets are necessarily going anywhere. I think Bitcoin is probably going to stick around for a fair bit, but any projections beyond that from a fundamental point of view, it was very much a bubble, right? And most of these useless tokens, which raised exorbitant, unjustifiable amounts of money, it almost wouldn't be right for them to survive. So it's kind of nuclear winter of sorts.
Yeah, a major wealth transfer from the naive to the slime.
Absolutely.
Anyway, so what else do you pay attention to in this environment? It's 2019. I know you're a disciplined technician. Anything else on your radar outside of crypto that you want to talk about?
Yeah, I mean, specifically for this year, I'm going to be moving a fair bit of my capital to Forex and trading currencies.
Oh, interesting. Welcome to the mafia.
Thank you. Yes, I'll learn the handshakes. And all
it's like Hotel California, buddy. You can check out, but you can never leave. Because I've tried. But
you've tried,
welcome to the world.
Thank you. Yeah, and there are all these jokes, in crypto about the market won't bottom until everybody starts trading Forex, this, that, and the other. But it really comes back to my origins. So I recently published an article on Medium about my trading mentors or teachers, whatever you want to call them, and they're all from Forex, right? I learned how to trade and trade technicals from Forex traders, especially because I haven't been a massive fan of the price action on Bitcoin recently. And I do have a bit of an appetite for a more regulated environment. And quite simply, price behaves quite well, certainly compared to Bitcoin in many cases in currency markets. So I've been following them.
You get one day off. You get one day off.
Huh? I'll take it.
I used to get 2 days off. Before 24/6,
that's it.
And then we'd have a lot of gaps in commodities and so forth, before we went to electronic trading. So, do you have a view on anything that you're paying attention to in the dollar? We've recently had a pretty good pop in euro, and cable has rallied fairly dramatically with all the background noise of Brexit. Wondering what your so we're looking at the U.S. dollar here.
We are, yeah. So in terms of macro view, not really a huge amount. So so I looked at it this morning. Funny that you ask. From an intraday point of view, I'm not really a fan that we've lost pretty much this structure here on the dollar index, especially so impulsively, right?
Yeah.
So
Friday.
Yes, quite. Yeah. So any moves up in the short term, I'll be viewing as corrective or retracements, and anticipating lower. As you mentioned, let me just quickly check when 25th was that. Yeah. So this is a kind of into the weekend breakdown, right?
Yeah, that was kind of spurred by an article in the Wall Street Journal that the Fed was looking at beginning to end QT running off its balance sheet.
Well, there you go.
Yeah.
So I'm naturally always more skeptical of breakdowns that happen at fishy times, if you will. So, overnight sessions, coming into the weekend, or if you trade crypto on Sunday lunchtime, those sorts of breakdowns I treat with some skepticism. So in terms of upside, if 96 level gets reclaimed, I'd like to see it trade towards the high at 96.70. If we get weakness at the 96 level, I'll treat this breakdown as genuine, and anticipate lower on the dollar index, and so euro and cable, I presume, will be able to trade higher.
Are you watching any commodities now, Cred? Gold recently priced above 1,300. A lot of interest coming into gold. It's actually done pretty well with a flat dollar.
Yeah,
like it's rallying against all currencies. Probably,
that's right.
Yeah, that's kind of interesting when it can rally against everything, and finally against the dollar it's rallying.
That's right. No, I've been paying attention to gold. The specific level was pretty much, so I can quickly mark it out in itself, 1292, but in general the structure was drop this base here that led to this monster sell-off. You can see the price had a real fight around there for 3 weeks, looking quite weak, but no breakdown, right? No lower low formed on the engagement, and then last week's candle absolutely plowed through that. I treat retaking this structure here is pretty significant. I mean, it's still at intermediate resistance or close by in the form of these old lows here. But I think if we can stay above 1,300, these highs here are next.
Okay, so if you're flat gold and you look at it here, do you just hold your nose and buy it even though you've had a $140 rally?
I mean, I wouldn't buy it right here, let's say at market, because again, as I pointed out, it's straight up at a resistance level here, right? This previous, you can see this floor that it built up, 1 touch, 2, 3, 4, arguably 5 touch level that was retested and then led to an aggressive sell-off. So higher, like weekly time frame, I think the level, you know, which was pretty much this structure, the fact that we've retaken that increases the probability that we trade higher, logically being towards these highs. But at market, I wouldn't smash it. Because I mean it's right at this old floor. There's pretty much a cluster of resistance at 1300s. If you can start getting acceptance above that, then I think we're good to go for the highs, but not at market where we are right now.
Okay. Actually, I think you know, between here and 1320, you might get some type of short-term top. I would love to see 1250 again. So that's something that wouldn't that be nice back under 1278? Should trigger it. Do you have a business model, Cred, or are you just a humanitarian helping people out all the time?
Business model.
Because if you are, I'll nominate you for the Nobel Peace Prize.
Business model, not at the moment, is the answer. Okay. I think I'm far too traumatized, having studied law at university, to do everything right and proper, and regulators, this, that, and the other. So there are a couple of basic things that I'm working on. I want to do like a video webinar subscription type thing, but I've been working with lawyers for over 4 months, I think, trying to sort out the regulatory part of it, and I'm none the wiser. So humanitarian, perhaps, business model in progress. It all depends on the suit that I email every day.
Well, you're smart to be looking at potential compliance issues before they happen.
I agree.
Sometimes an ounce of prevention, so, when you launch something like that, please let me know and we'll have you back, and appreciate your time and letting your followers know you're going to be talking to me. Why don't we leave it with this? The most important piece of trading advice you could give everyone who's watching us live and listens to it later.
Most important piece. This is going to sound terrible, but be yourself. And specifically, I mean, imitating traders has become very trendy and popular. And I think I've never met a single trader who was successful by purely imitating someone else. So be yourself.
That's great.
Yeah, take stuff that works for you, ditch what doesn't, and ultimately, you're trading for yourself, so why don't you make it work for you? That's what I'd say.
You'd be surprised. Jack Schwager, who wrote the Market Wizard series, answered the question this way. He said, find a trading style that suits your personality.
That's it.
So you were, basically saying the same thing. You're You're like Jack Schwager.
Yeah, no, that's totally fair comparison. Yeah.
You have more followers than him on Twitter. Check it out.
Oh,
Anyway,
yes.
Craig, thanks so much for being with us today.
Thanks
Good
for having
hunting.
me,
You know, hope you have a great 2019 and your transition to Forex. That pips rain down on you all year.
Thank you very much, mate. Thanks for having me.
All right, buddy. So that's it for Turnaround Tuesday. Thank you very much, everyone. Good hunting, and see everyone tomorrow. You could follow Cred at CryptoCred on Twitter. Thanks again. Remember, don't just count your pips, count your blessings. And I'll see everyone tomorrow. I'm a crypto guy now.